Alright, what's going on everybody? I'm going to show you real quick in this video how I determine my levels and do my pre-market analysis. So every single day at around 9:20 I will drop pre-market analysis in this tab. I'll say, okay, we're currently inside of this gap, I'm looking at this, and it helps me determine what trades I'm going to take. So we're going to go in the replay mode. We're going to pick, I don't know, any random day. Let's do a December day, why not? So December 9th. I have no idea what happened on this day, but you go the higher time frame. So here's what I do pre-market to be able to establish, what trades I'm going to take. I just go from top down on the time frames. Okay, we have this daily gap right here. So, there's a chance we can hit that since we edged it, but we're also selling off hard here off this 4-hour gap. So there's a chance we'll go to these stacked lows. So on every major liquidity pool, I'm just marking out obvious liquidity. And hourly wise, okay, we're going to open up this hourly at a certain point. We're also going to touch this low. 30-minute, what's happening? We open this gap at open. So let's see if we'll hold that. So this will be important in a second. We're also going to get the 15-minute. So the 4-hour, 1-hour, and daily I use to help me with getting a bias. And then the 15 and the 30 are very important because those will be my conditional time frame. So what I mean by that is I'll be like, okay, what's a gap nearby, like near open, and we'll use that to see if we're going to be bullish or bearish, depending on, what my directional bias is. So since this is a 30-minute bearish, if we're above this, I will look for continuations that are above the gap because obviously we're going to be bullish if we're inversing a 30-minute gap. If we tap and respect this and we get an entry below the gap, I will say, okay, we're bearish, which helps, line up with our higher time frame bias here. Because, we're respecting a 30-minute gap and we have draws below. So that's how I look at the pre-market. Now we get into open here. Wherever it is, holy shit. Okay, there's open, and what do you know? Shocker, it works. So we immediately tap this 30-minute. We get this 1-minute inversion. Stop below the low. God damn it. Stop below the low. 1-to-1 RR. This external, and it hits immediately. So why does this happen? It's because you go on the 30-minute time frame and look at the wick. Like I said, this was our condition. All right, I had a bias. I had liquidity pools set. I guess we already swept this low, so it wouldn't even be a liquidity pool anymore. We swept it before, but whatever. You could aim for fucking. Oh no, I was targeting this. Okay, so it was valid. So yeah, that's about it. That's how I look at the time frames. You go on the daily, 4-hour, 1-hour, and you get your bias. You see what we're respecting. You say, okay, we're probably bearish. And then on the 30 and 15, you go, okay, what's a nearby fresh gap? Like, for example, okay, we already inversed this big-ass 30-minute, or we're looking to. So now, if we could respect this 30-minute bearish and inverse back under this 30-minute bullish, then we're good. We get this 1-minute inversion, our entry model, which is also lining up with these fresh gaps. This one getting inversed and this one getting tapped and respected. There might have even been an internal S&T here, perchance. I don't know, actually. I don't think there was. These are like equal highs. I don't know. I don't think so. But, I mean, super obvious setup. And then we obviously wick off the liquidity pool. And then it doesn't really matter what happens after that because we already got our setup. But let's say, let's watch this actually. Let's see what happens. Let's go on the 5-minute time frame. So now it looks like we're pretty choppy here. So this will probably be the only setup of the day. Let's see. Do we end up inversing this 30-minute or no? Nope. We just stay inside of it for the entire session. Oh, we finally inverse it. There it is. So now we finally get a push up. Do we make any gap, anything of any sort? Holy shit. Holy chop, central. Nothing at all. Finally open up a 5. This is after when I typically trade. But, you could probably look for like a continuation or something like this. This is lower probability. Yep, it works. Get this 1-minute inversion, stop below the low. 1-1. So yeah, that's how you look at it. You find fresh gaps, 30-minute, 15-minute nearby open, and you use those as conditions. You say, okay, are we going to respect or disrespect this going into open? And then whatever happens, you can use that to then find your entries above or below it. But make sure that your entries are above or below those gaps, depending. If you're trying to take a continuation long, but we're under a 30-minute bearish gap, bearish gap, and we've respected it, then that's going to get stopped because you're going against the higher time frame bias. So the higher time frame and the draw on liquidity is the most important shit, knowing where the market is going to go and knowing what we want to do as a market. And then the lower time frame is just perfect timing.